FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to the Financial Survival Network. It's Kerry, Lutz. The date is April 22nd, 2015, and it's What Will Happen Next Wednesdays with Andrew Hoffman. Andy is suffering from a case of bronchitis, so forgive me, I'll be doing more of the talking today. Andy, go easy on your voice. What's up today?
You know, I guess the voice is making it difficult for me to rant like usual. But, you know, we have an all-time disparity between reality and financial markets. And frankly, it's getting to the point where it's becoming a joke now. I mean, watching the Chinese economic data and actually last night, Japanese imports, I think, fell 15%. And you have a full-fledged NASDAQ 1999 stock bubble being encouraged by the Chinese and Japanese governments, while their economies are falling apart. And the same is going on here.
Yeah, we have a retail apocalypse. I mean, I went to the mall yesterday and every store, the place is empty, Andy. I mean, now granted, it's Tuesday night, so you don't expect it to be real crowded, but the place, and this is in a prosperous area, the place is a ghost mall, and every store is empty except for the Apple store, because everybody has to go and look at the new Apple Watch and, you know, rub their hands on various Apple offerings. But every other store in the stupid mall is empty except the food court and Starbucks. But pretty much the place is a ghost mall. And I'm trying to figure out how these places are staying open. And you can only borrow at 0% for so long when even your debt service is going to kill you at 0%. It just makes no sense.
Well, that's the whole key. It's the reality thing. How long can things stay open? How long can the oil industry survive at these prices? And again, you know, I'm watching the oil PPT at work again. I mean, you couldn't have worse data across the board. I mean, Saudi Arabia, all-time high production, all-time high rig count. They even stopped their bombings in Yemen, so that excuse isn't there anymore. We had new API and what's the other one? EIA data come out. Right. Yeah. You know, surging terrible inventories. Demand is certainly not going up anywhere, and they're trying to hold the prices up. I'm looking at, you know, a smattering of commodity prices that are hitting new lows. Lumber, coal, iron ore, even rough rice, plunging to new lows. And yet they have a handful. They just won't let oil go down because they know that there's so much capex that's tied to it. And, you know, I see copper inventories have doubled in the last 6 months on the LME, and yet the price is not allowed to go down like the other commodities. And then, of course, you have what's going on in gold. I mean, it's a cataclysm from a business perspective. How long can they stay in business? I was just sending an email to some people about some of the mining stocks that look like they're going bankrupt right now.
Yeah.
I've said it back when I wrote about it at the end of the year. Companies like Coeur d'Alene and Kinross and Harmony and Goldfields. I mean, these are major companies that are on the verge of bankruptcy, in my opinion. I think we're one write-off away. And that's why I think that, you know, Newmont and Barrick are probably going to start off the consolidation wave like the oil industry 15 years ago. And, you know, we've already cut capex to the bone. I think they're going to cut it dramatically more so, and that we've easily seen peak gold and probably peak silver right behind it.
Yeah, I mean, it's insane. And by the way, I've got a very close friend in the oil patch, Dr. Frankenstein, we call him. Do you know what the true unemployment number is in the oil patch? It's close to 250,000 jobs, and we're not talking burger flippers here. We're talking 6-figure and up salaries. It's nuts. Yeah. This is crazy.
Baker Hughes, one of my old companies, they're actually merging with Halliburton, which was also one of my old companies that I covered on Wall Street. They just announced 17,000 layoffs yesterday. I mean, these are again, the BLS, that fakes all of our job data, even their data admits,
You're such a cynic, Andy.
Yeah. Well, I mean, it's provable. I mean, it's stuff we've been doing forever. It's not like, again, their footprints are like the Sasquatch. It's not like it's difficult to discern that the data is wrong. But even their data shows that energy is the only industry that has had any growth in jobs since the financial crisis. And of course, it's only had that growth because they cut rates to zero and they allowed Wall Street to get into more of their predatory securitization and lending practices. And they financed every high cost oil producer imaginable. And now they're all going to go bankrupt. So again, the government could say all they want about recovery, but there is no recovery. I mean, their own data, the Fed's own data is showing that there's zero economic growth in the first quarter. And the thing that kills me is, at least last year with this polar vortex, they spent all this time talking about, oh, it's the weather, it's the weather. This year, the data's bad and they're just lazy about it. It's like once in a while you hear the weather here and there. And, now I'm reading that the Fed is claiming that the first quarter data is bad because of the weather, but mostly in March. And in March, the weather wasn't bad in March. In fact, it was not only was it higher than normal, but it was pretty normal. In fact, spring starts in March. So what are they? And they just announced this morning that existing home sales, and again, these numbers are always revised down, and when you compare them to where they were 10 years ago, they're nothing. But they were surged the highest in 2 years during March, especially in the Midwest. And you go, well, but you just said that the weather was causing economic data to fall. I mean, all this stuff is just complete BS. And across the board, this is the worst economy, I maintain it, of our lifetimes in the United States. And and it's not going to get any better.
Where is it going to get better? I just can't see it happening.
And the debt keeps going up, and that's what a Ponzi scheme is. It has to keep going up. And that's why any talk about rate increases, and by the way, for all the hype about rate increases, and again, I mean, how much more can the Fed have said themselves that we're dovish? But you look, I just published the other day. There's a chart that says traders' expectations of a rate increase, by the third quarter, by September meeting, and it was 100% 3 months ago, and now it's 39%. So where is this expectation of rate increases? There's none.
No, it's impossible. It can't come, and we're just not going to see it. It's just imaginary. And well, just looking at what we've got for today on our list of things here, just oil and copper supplies. We said just going crazy. This retail apocalypse, I mean, the number of chains in bankruptcy and in liquidation and closing, how can that be good for commercial real estate? And yet, like you said, the market keeps going up. The only good news I've seen lately is that actually rental real estate, in terms of residential real estate, that's been positive as more people lose their homes, and as the millennials refuse to buy real estate, buy their own homes. That's improving. But aside from that, there is nothing really positive out there in the market.
Well, improving is the wrong word, because the 99% of the people that are paying those, it's the 1%, the Black Rocks, the government funded institutions with the ZERP that have been buying up all the real estate that benefit from that. And of course, even they have not been buying anymore. They, if anything, have been leaning towards selling, because again, they talk about housing prices, but the housing price index, peaked a while ago. It hasn't plunged, but it hasn't been going up for some time. They have these sentiment indices that are biased, that say that sentiment's going up from home builders, but that's ridiculous. I mean, the price of lumber is down. I think it's like 30% this year. I mean, we're only in April. So obviously they're not building more, and the expectation is they're not going to build more. But then, again, there's just this land of lazy journalism that's like, oh yeah, there's a housing recovery. Oh yeah, but it's not even like they're even looking at data anymore, or even citing data. It's just kind of like saying, and now it's at the point, it's like, yeah, let's say that there's a recovery, just like the Fed says, we think things are better, and if they continue to get better, we'll do something about it. But if they don't, we won't. And it's kind of just this point where markets have been so commandeered that people even the mainstream media doesn't bother trying anymore to justify. It's almost like they don't show up for work. I'm seeing less and less headlines on Zero Hedge each day with actual news items, because it's almost like everyone's given up trying to report what they don't understand. It's kind of everyone's like in a coma. And based on, the market goes up. Look at that. Gold goes down. We got guys like Harry Dent now who get big press by saying gold's going to go to $700 based on absolutely ridiculous assumptions. I mean, he'll probably write some today that gold's down. See, I told you about deflation. Yeah, but no, gold got hit today because housing sales were so high. What does that have to do with deflation? Again, it's lazy journalism across the board. Right now, we're talking about manipulation everywhere. When I look again at the mining sector and how important it is, the carnage that's been caused on the sector, and I could see stocks now, big stocks that look ready to go bankrupt. And I realize how fast we're going to see production fall at a time where, look at the data from China. They're at record levels of demand, Indian levels. These are the only two countries that matter, record demand. You think there's not demand increasing across the world where the surging dollar is causing collapse in currencies and rising gold prices around the world? Of course, the demand is not going anywhere, but higher. So, something is going to give in this physical world. Something's going to give in the United States world of fantasy, where they think that they've usurped economic mother nature by taking over financial markets for a couple of years.
And we've been here before. This is a new era, right? This was 1929. We were in a new era. Remember that? And you know what happened then?
Well, we were at a permanent plateau. And that guy, what was his name? Irving Fisher. I forgot his name. He said stocks have reached a permanently higher plateau. I think he said it a week before the 29 crash.
It would be funny if it wasn't so pathetic, but those new plateaus seldom ever work out the way they say.
And again, remember, this is not 1929. This is 1,000 times worse than 1929. 1929, we had a gold standard. 1929, there was not. 1999. Don't kid yourself. It was caused by Wall Street. Remember, the Fed came into being in 1913 and spent 2 decades lending money and credit and creating this, the stock boom, which was fake. But, we still didn't, as a nation, didn't have much debt, and it was all liquidated during the Depression. It was really no big deal. Here, it's a Ponzi scheme of explosive debt, which can only get bigger. And the currency that supports it, or the currency that it supports is sitting on quicksand.
Yeah. It's quicksand, all right. And hey, these things, they all work out the same. It always winds up the same. And unfortunately, this one's going to work out the same as all the others. Anyway, Andy, we have to let you go because you are working with a weak voice today. So on that note, find Andy's work at milesfranklin.com. Must reading. Check out his audio blog and check out Bill Holter's work too. We'll have to have Bill on shortly. And go over to financialsurvivalnetwork.com. Check out our work. Check out the work of our tireless webmaster, Stefan. He's culling through articles from all over the world. It's definitely must reading, and sign up for our newsletter and our mailing list as well. Andy, feel better. We will talk to you next week.
Absolutely. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.